this looks like it's been a very, very big quarter for Cisco, but a lot of the attention is now being focused on the company's workforce rebalancing. Can you explain a little bit about that to us? Because, we've seen this number bandied around of 4,000 cuts. Now, are these jobs actually being cut, or will some of them be reallocated within Cisco?
So James, just to the backdrop, yes, a very good quarter that we just delivered with top line growth of 6% and then EPS, non-GAAP EPS growth of 11%. Now, going into the new fiscal year, we did mention today that we would have a workforce reduction of approximately 4,000 employees on a global basis. And we mentioned that this was part of workforce rebalancing. So the key thing for us is, as we look at our portfolio over the next couple of years, we want to make sure that we are emphasizing the investment in the areas of growth. And for us, as we've seen the last 2 years, and we expect to continue to see higher growth going forward, data center cloud, mobility, services, security, and software are some of the areas that we're looking at, making sure that we can double down the investment to make sure that we can capitalize on those growth opportunities going forward. So that's going to require us to reduce about 4,000 jobs so that we can emphasize the investment in those areas.
Now, I mean, it seems like quite a stark move, because I think, in the quarters leading up to this, I think we've got a pretty good impression from Cisco about where the global economy is going. Now, maybe we're getting a sense that, as John Chambers said during the call, there are inconsistencies in global GDP. So is this something that's really been forced on you in the last few months?
No, I think, James, first of all, as if I look back on the last 2 years, we've had, I think, great success delivering on what we said we were going to do, aligned with our long-term financial model that we provided to our investors of long-term growth rate of 5 to 7% and non-GAAP EPS growth rate at 7 to 9. So delivering on 7% growth 2 years ago, this past year, delivering on 6% top-line growth. So we have been able to demonstrate that we can execute in that range. Part of the other equation is to make sure that we are providing leverage in our financial model, where we said we're going to grow profits faster than revenue. And that does require us to make sure that we're continuing to look at areas of efficiency. So again, we've done that in the last 2 years. We're going to continue to do that in the couple of years going forward. And we also want to make sure that as we look at portfolio, and we've had a big effort underway the last 2 years on portfolio rebalancing, so this is a continuation of that, to make sure that we're investing in areas where we see growth opportunity over the long term, and make sure that that growth opportunity turns also into profitable growth. So as we continue to go through our process of planning year after year, we want to make sure that we can continue down that effort. Now, unfortunately, it's very difficult when you have to make a decision that affects employees. It's something that does not come easy for us as a leadership team. But we also understand that the rate and pace of change in the overall environment, especially in technology, and we want to make sure that we maintain our competitive ability to innovate. And so those trade-offs need to be made.
Okay, and now obviously, I mean, it's a tough move, it's a tough decision to make, as you say, to make these cuts. Like John mentioned on the call, that some could be reallocated within Cisco. What's going to happen there? Will they be hired back? I think he mentioned something like a third of them could be reallocated. Is that correct?
So we haven't gone through any of the details. We just announced it this afternoon as part of the conference call. It's important for us to connect with our employees on a global basis, which we will be doing over the next several days, and continue to work out specifically what those plans will be and how that would be managed from a global workforce perspective. So right now, we're not at liberty to say anything more detailed other than just the broader message as far as the decision to reduce the workforce by 4,000 on a global landscape.
Okay, and just as a final question, what sort of competitive pressures are you seeing? I mean, are there competitive issues out there that you're having to deal with, or is this restructuring basically being forced, as you say, purely by global economic reasons?
Well, I think this is, as I said before, I think the importance here when you look at this is continuing to execute as we have the last 2 years, to make sure, again, we're focused on the business strategy and where we see the right opportunities, focus on our customers, which is primary for us. where we feel that their needs are, and making sure from a competitive standpoint that we continue to be competitive. I wouldn't call these are competitive issues. We have been competitive. We've improving our market share during this time frame as well. So that shows that we've been able to really execute on what we need to deliver. We want to continue to do that, and we want to make sure that we continue to balance and put the investment in the areas that's going to give us the best return, and also align with where our customers need us to make the investment.
Okay, that's excellent. Frank, thank you very much for your time this evening.
James, it was good talking with you. Thank you.